all, a statement of cash flows, basically, this is one of the components of the financial statement which is prepared by companies, basically for the company to be able to show the sources of cash and basically the application of cash. So basically what that means is that once you're given a statement of cash flow prepared by a company, you should be able to see how the company generated cash and basically how that particular cash was spent. Now, a statement of cash flows basically should be prepared in accordance with this particular standard, International Accounting Standard number 7. And actually, this particular standard requires that when a statement of cash flow is being prepared, the various activities which are undertaken by the company, basically to be classified into three categories. I hope you can be able to recall those particular three categories. Number one, we have the operating activities. Number two, we have the investing activities. And number three, we have the financing activities. So anytime you are preparing a statement of cash flows as an accountant, what you need to do basically is to appreciate the fact that the activities of the company should be classified into three categories. Operating activities. So what do you mean by the operating activities? These are basically the revenue generating activities which are basically undertaken by a business entity. For example, a business entity may be providing services. A business entity may be selling goods to its customers for that business to be able to generate what? Revenue, or to generate what? Income. So therefore, operating activities, these are the revenue generating activities, e.g. provision of services, e.g. the sales of what? Of goods. Now, on the other hand, when we talk about now the investing activities, these are those particular activities which include acquiring assets and also selling or basically disposing what? Asset. And maybe for those who are doing AFR, this also include acquiring a subsidiary and also disposing what? A subsidiary. And then we have the financing activities. And basically, these are those particular activities which by the end of the day affect the size and the composition of the company's capital structure. So any activity undertaken by the company, it affects the capital structure of the company. That is the size and the composition is a financing activity. E.g. maybe the issue of shares, the issue of debentures, acquisition of bank loan, maybe the redemption of debentures which have been issued by the company, and so on. And then after classifying the activities into those three categories, in preparation of the statement of cash flows, we have to determine the net cash flows from each of these three activities, basically in that order. We determine the net cash flows of a company in that order. How do we determine this particular net cash flow? So to determine this, we take the cash inflow. Basically, when we talk about the cash inflow, this refers to any money which is flowing into the business. Like once the company sells an asset, the company receives money. Once the company issues shares or basically debentures, the company receives money. So the money which is received or money coming into the business, we basically refer to that as a cash inflow. The other rule is that when preparing the statement of cash flow, any amount which is a cash inflow, we record it in our statement of cash flow as a positive. As what? As a positive. So we take the cash inflows and then to this we less the cash what? The cash outflows. So the cash outflows, basically, this refers to any cash which is flowing out of the business. And the rule is that anytime you are preparing a statement of cash flow and you come across an amount which is a cash outflow, then you record it as what? As a negative. So therefore, to determine these net cash flows, we take the cash inflows as positives and then we less cash what? Cash outflows. So basically, we deduct the cash what? Cash outflows. That's why we are saying cash outflows. We record them as what? As negative. So by the end of the day, we will be able to get the net cash flow from operating, investing, and also what? Financing. So maybe the other thing you need to remember very fast is that when preparing the statement of cash flows, basically we have two methods which can be used to prepare a statement of cash flows, or in other terms, to present a statement of cash flows. We have the direct method, and also we have the indirect method. And actually, the difference between those two methods, that is the direct method and also the indirect method. Indirect method is basically how we determine the net cash flow from operating activities. That is the only difference. How we determine the net cash flow from operating activities. That is actually the difference between these two methods. So under the direct method, basically, we determine the net cash flow from operating activities using a direct approach. Basically, we go to the cash book prepared by the company. Number one, we take into account the cash received from debtors or customers, which is basically a cash inflow. Then to that, we less the cash paid to the suppliers or creditors. We also less the cash paid for operating expenses. We also less the tax paid and the interest which was paid. We will be able to get the net cash flows from the operating activities. That is now using the direct what method. Now, under the indirect method, we compute the net cash flows from operating activities using what? Using an indirect approach. And actually, what we do under the indirect method, we take the profit before interest and tax, and usually we adjust it with 3 items. The non-cash items, which were added or deducted in arriving at that profit. Number 2, the changes in working capital, basically where we consider 3 items of working capital: receivable, inventory, and payables. And also we adjust that profit with any investing or financing activity item which was added or deducted in arriving at that what? A profit. So basically, I think that is the first thing you need to remember as far as the statement of cash flows is what is concerned. And I think with that particular quick recap, I want us to go straight to a question. And there is a question which has already been shared in the class chat box, maybe for those who are joining us right now. So there is a question which has already been shared in the chat box. So if you can be able to see that question, please confirm that is the question you want us to do. Can you be able to see that question, those who are just joining? If you can be able to see that question, please confirm that is the question I want us to do. Can you see that question in the chat box? Can you see that question in the chat box? I want us to use the question from CPA foundation level. CPA foundation level. That is the question 4B of August 2024. Yes, so can someone reshare that question afresh? Evans, please reshare that question afresh. Reshare that question afresh. Reshare the question afresh. Yes, so I think it has already been reshared there. It has already been reshared there. So let's go through it. We see what we are told and equally what the examiner was requiring here. So the question reads, part B, question 4B, it reads, the following are the financial statement of Precious Limited for the year which ended 31st of March 2023 and 31st of March 2024. So we are given Precious Limited statement of profit or loss, which is for the year which ended 31st of March 2024. We have the gross profit, operating expenses. We have other incomes which include interest income received, the gain on sale of investment, and then we have the loss on sale of plant. And then from there we have the interest paid, the interest expense which was paid, and then we have the net profit before tax. We have the income tax for that year, and then we have the net profit after tax. So then from there we have the statement of financial position. We are given statement of financial position basically for 2 years, 2023 and 2024. It is important for you to note that anytime you come across a question for cash flow, always the examiner will give you the statement of profit or loss for the current year. And then for the statement of financial position, that is basically the balance sheet, you'll be given the statement of financial position for the current year. For example, in a case, the current year is the year 2024, and for the previous year. So what you need to note is that the figures which are given here in the statement of financial position of the previous year, 2023, these are treated as the opening balances, whereas the figure we have here in the statement of financial position for 2024, those are closing balances. That's basically what you need to know. So we have the non-current assets, which include PPE, property, plant, and equipment, at cost and also accumulated depreciation. We have the investment, we have the current assets, which include inventory, accounts receivable, cash prepayment, and then we have the total current asset and the total asset. And then we have liabilities and capital, where we have ordinary share capital, revenue reserve. Revenue reserve, this is another name for the retained profit, or is basically another name for the retained what? Earnings. Then from there we have the long-term liabilities, which include both. We have the current liabilities, which include account payable, accrued liabilities. And then we have tax payable. And then we have the current liabilities, total equity and liabilities. Then we have additional information, number 1, all the way to note number 7. So what then are we required to do here? We're required to prepare a statement of cash flows, which is for the year which ended 31st of March 2024, in accordance with the International Accounting Standard number 7, which governs the preparation of the statement of cash flows. Now, in this case, number 1, recall what we have said. There are two methods which are used in preparation of cash flow. We have direct method, we have indirect method. But if you check on this particular question, the examiner has not specified which method we need to use, whether we use the direct method or basically whether we use what? We use the indirect method. But anytime you come across a question for cash flow, you are given the income statement or the statement of profit or loss, statement of financial position. If the examiner is not specific on which method to be used, always use the indirect method. So the indirect method basically has so many free marks when it comes to computation of the cash flow from operating activities. So that is the first thing you need to do. The other thing, assuming this is a question you are doing in an examination setup, it is not advisable to start with the workings because this where or what make majority of the students to fail in these particular questions. So how do you get free marks, or basically what we refer as the low-hanging fruits? So basically what you need to do is that once you come across a question for cash flow, number one, never start with the workings. Just go straight to what the examiner is requiring you to prepare, because the 16 marks which are allocated there, they are allocated for preparing a statement of cash flow. So if you do all the workings, they are correct. By the end of the day, you fail to prepare the statement of cash flow, you will get 0. So therefore, what you do, go straight to preparing what is required. Basically, any working which you do it per need basis. You are doing a working to determine an item to be posted in the statement of cash flow. So therefore, what we do, we go straight to preparing what is required. And actually, we need first of all to have the title. So the name of this company is 𝗙𝗺cie Limited. 𝗙𝗺cie Limited. And basically, this is the statement of cash flows. The statement of cash flows. And basically for the year, which ended 31st of March 2024. 31st of March 2024. Obviously, you must have the title. You must have the title of what you're preparing. And then from there, you need also to remember, in preparing this particular statement of cash flows, we have to determine net cash flow from 3 activities. So can you have those particular 3 subheadings? So basically, always, we start by determining the cash flows from operating activities. That's basically what we know. We start by determining the cash flows from operating activities. So here we need to have 2 columns, and I hope you can be able to see that if you go back to that question, all our figures are given. The figures in the income statement or the statement of profit or loss, the figures in the statement of financial position, they are given in thousands of shillings. So you need to have 2 columns here like that. So then from there, you leave some enough space here, because when computing the cash flow from operating activities, we have so many items which we record here. So leave enough space. And then from there, you have the other subheading for basically determining the cash flow from what? The cash flow from investing activities. And basically, remember, in this case, we have said investing activities are those activities which involve acquiring assets and also selling assets. So what we record here are the assets which were acquired, the assets which were purchased, and the assets which were sold. So we don't have so many items which we record here. Leave just enough space, not a big one. And then from there, we have the other subheading for determining the cash flow from the financing activities. And actually, all the items which we record here, we get them from equity and basically the non-current liability section of the statement of financial position. All the items which we record here, we get them from the balance sheet, specifically at the equity and non-current liabilities. And then down here, we come and we record something known as the cash and cash equivalent. This is cash and cash equivalent balance brought down. And also we record the cash and cash equivalent balance carried what? Balance carried down. Balance carried what? Balance carried down. That's the first thing you need to have anytime you come across this particular question for what? For cash flow. Anytime you come across this particular question for cash flow. And then having that now, I want we proceed and we look on how then do you get the low-hanging fruits. So there are the low-hanging fruits. Remember, we have said that these are the free marks. These are the marks basically you get without any working, without any what? Any working. So basically, the first thing I advise my student to record is this. cash and cash equivalent at the start, and also at the end of the year. So what do you mean by cash? Cash, basically, you can be able to recall, this is cash in hand, a cash at bank overdraft, and then cash equivalent. These are the short-term investments, the short-term what? Investments. So basically what we need to do is we go to our statement of financial position under the current assets. We check whether we have cash in hand, cash at bank, short-term investment, and then still we will go to where we have current liabilities. We check whether we have a bank overdraft. So can we do that? The first thing, we go to the statement of financial position, specifically under the current asset. So under the current asset, can you tell me which item of cash and cash equivalent do we have there? Which item of cash and cash equivalent do we have under the current assets? So tell me which item of cash and cash equivalent we have there. Which item of cash and cash equivalent do we have? Do we have under the current assets? Type it in the chat box. Yes, I'm told the first one is basically cash. Is actually what? A cash. You also check, do we have bank balance? No, we don't have bank balance. Do we have any short-term investment there? No. So therefore, and remember what we have said, that we are given statement of financial position for 2 years, 2023, 2024. So the balances we have here, these are opening balances. In other terms, these are what we refer to as the brought down. The brought what? Down. Whatever we have here, these are closing balances. This is what we refer to as the carried what? Down. That is also very, very important. Very, very important. So therefore, what we have is cash. So what we do, we take cash, and basically the cash, we take cash at the start from the statement of financial position for 2023, and I hope you can see that is a figure of 2250, and then from there we go to where we have the current liabilities. We check, do we have a bank overdraft? So under the current liabilities, do we have a bank overdraft? Yes or no? Do we have a bank overdraft? Yes or no? Under the current liabilities, do we have a bank overdraft? No. So but if we had a bank overdraft is basically money which is owed to the bank. We come and we raise it there. So therefore, the cash and cash equivalent at the start is how much? Is 2250. So we do the same. We do the same at the end of the year. So by now we know that we only have one component of cash and cash equivalent, and that is basically cash. So what we will do, we will take the cash and cash, the cash balance at the end of the year, and basically that is an amount of how much? That is an amount of 69. That is an amount of what? Of 69. Yes, someone can, someone to share that question, to share that question in the chat box. Someone to share that question in the chat box. Someone to share that question in the chat box, please. Someone to share that question. Someone to share that question in the chat box. Okay, it has already been shared, Janet. There. I hope you have seen it. Yes. So that is the first thing you record. And in most of the cases, what is important for you to note, what is marked in these particular questions are the entries. Are what? The entries. And basically, mostly this particular question for cash flows, how are they marked? This is how these particular questions are marked. So like you can see the marks are located here are 16. So mostly these particular questions will be marked like this. Any 8 correct items here, you are given 2 marks. So mean that if you get 8 correct entries here, you'll get 16. Alternatively, if the question has so many entries, the question can be marked like this. Any 16 entries at 1 mark, and basically you get what? The 16 mark. So it depends with the number of entries. So if a question do not have so many entries, it can be marked like that. If the question has so many entries, it will be marked like that. So therefore, what is important here is not by the end of the day to do so many workings here. What is important when preparing a statement of cash flow are the correct entries you make here. Are the correct entries you make what? In the statement of cash flow. For example, those 2 correct entries, those 2 entries, they are correct. Those are already 2 ticks. Yes, after doing that, then we come back here to where we compute the statement of, or actually we compute the cash flows from operating activities. And remember, in this case, I've said here, we are preparing this particular statement of cash flows using the indirect method. So under the indirect method, we compute these particular cash flows by starting here, or here we start with the profit before what? Before tax. When computing this, we start with the profit before tax. Where do we get the profit from before tax? We get this from the income statement. Can we go to the income statement? You give me the profit before tax. How much is the profit before tax from the income statement? How much is the profit before tax from the income statement? So in our case, it is referred as net profit before tax. Net profit before tax. Can you see that one? Net profit before tax? Yes. So the net profit before tax is basically an amount of 450. But if you can be able to recall, we said in computing this particular cash flow from operating activities, we should start with the profit before interest and tax. In other terms, what is known as the operating profit. But if you check, in our case, we don't have that operating profit. So therefore, what we say is that to this particular profit here, the first adjustment which we make, or the first adjustment to this profit, is basically to add back the finance cost, which is also known as the interest expense. The interest expense. And actually, this interest expense is always above that profit. Is always above that profit. So can you see that figure of the interest expense? Yes, the interest expense is the same. That is an amount of 3450. And actually now that will give us the profit before interest and tax. And then from there we say to this particular profit, we need to make a number of adjustments. The first adjustment we make to this profit is basically to adjust it with the non-cash items. We say the non-cash item. For you to be able to remember the non-cash item to be adjusted to this profit, just remember that acronym. The acronym is 𝗙𝗪𝗃. 𝗙𝗪𝗃. So this stands for what? This stands for depreciation. This stands for depreciation on property, plant, and equipment. This one stands for impairment loss. Impairment loss on goodwill. Impairment loss on goodwill. A stands for amortization. Amortization of intangible assets. Amortization of intangible assets. Then this one stands for loss on disposal. Loss on disposal. So the loss on disposal is basically whereby the company disposed or sold some assets during the current year, and basically the asset was sold at a loss. They were sold at what? At a loss. And this one is basically stand for gain on disposal. This one stands for gain on what? On disposal. So therefore, what we need to do, we need to go to the additional information. But I think even before we go to the additional information, because most of these items will be given in the additional information, on the face of the income statement, there are a number of items we need to adjust to these. We need to adjust to this profit. So can we go back to the income statement or the statement of profit or loss, and specifically whereby we are given other incomes? Specifically whereby we are given other incomes. So where we are given other incomes, number one, we are given something called the interest income received. Now, interest income received, is that an income from operation? That is the first thing you need to ask yourself, because what we want to determine here is the cash which was generated from operating activities. Now, anytime you're given an interest received, a company receives interest as a result of having invested. So therefore, what you do, because that interest has already been included here, you come here and you erase it. So first of all, we can skip all these items, and then we take the interest which was received, interest income which was received, interest income which was received, which has already been added in this profit. So the reason why we are raising this is because this is not an income from operation. So this is an income generated by the company from what? Investing. So you raise it from that profit, and then you come and include it here. So that is the interest income which was received. And remember, this is money which was received. So when recording it here, you record it as a positive. So why are you recording it there as a positive? It is because it is cash which was received, is an inflow. But here we're recording it as a negative. Why? Because we want to eliminate it here from this profit. It is included there, but it's not income from operating activity. So you less it here, and then you bring it there. That is the first item. Then still under the other income, we have the gain on sale of investment. So the gain on the sale of investment. So anytime the company sells an asset, be it an item of PPE, and that item is sold at a gain, So that gain is usually accounted for as an income, but basically we say that is a non-cash item. That is a non-cash item. So take into account it is included there. What do you do? Place it down there. Then also below that, the gain on the sale of investment, we have the loss on sale. We have this. So the loss. So the loss, basically this is 450. You can see the loss in arriving at this particular profit, it has been deducted. It was accounted for as an expense. So, and because this is a non-cash item, what we need to do, we need to add it back. Actually, these non-cash items, basically which we have here, depreciation, impairment loss, amortization, and the loss on disposal, because in arriving at this profit, they had been deducted, what you do, you add them back. But now this gain, you do what? You less it. That's basically what you need to remember. Yes. So you can see that all these are 3 months. All these are 3 months. This is basically what we refer to as low-hanging fruits. These are basically marks which you're able to get in this particular question without any struggle. Without any what? A struggle. You can see so far we have not done any working, but we have so many entries here. Yes. Now, having said, I think we need to go to the additional information because we don't have anything else we can be able to pick from the statement of profit or loss. Let's go to the income statement. Not to the income statement, in the additional information. In the additional information number 1, we are told Precious Limited purchased investment worth 11.7 million during the current year. So this company purchased investment. So if a company purchased investment, remember is a form of an asset. And that's why if we go back to our statement of financial position, specifically where we have the non-current asset, you'll be able to see we have the property, plant, and equipment. We have accumulated depreciation. Below that, we have investment. So we have said those particular activities which involve acquiring and disposing assets, they are what? Investing activities. So that purchase of investment, you come and you record it here. Purchase of what? Purchase of investment. Purchase of investment. So the investment which were purchased were 11.7. And I hope you can be able to remember in all the figures we are given in the income statement of financial position, the last 3 zeros are omitted. So anytime you are taking a figure from the additional information, you must do the same. Omit the last 3 zeros. Then you also need to remember our rule here. When preparing the statement of cash flows, we have said this rule is very, very important. This rule is very, very important that any amount which is a cash inflow, we record it here as a positive. Any amount which is a cash outflow, we record it in our statement of cash flow as what? As a negative. So now who can tell us this particular amount here? Once the company purchased an investment, is that an inflow? That particular amount there, is it an inflow or outflow? The company purchased an asset. Is that an inflow or basically outflow? Inflow or outflow? Who can tell us? Inflow or outflow? Yes, automatically this one is outflow. This one is what? Is outflow. So take into account is an outflow. We record it here as a negative. Don't forget, if you record it here as a positive figure, it is wrong because the person is marking will only give you mark if it is recorded as an outflow. We are done with that. Let's move to note number 2. We are told the company sold a new investment that had cost 13.5 for 15.3 million. So we have sale of investment. So remember what we consider here is asset which were acquired, asset which was sold. So in that case, we can say there was sale of investment. There was sale of investment. And basically, once the company sells an asset, what do we consider here? What we consider here is the proceeds. When talk about the proceeds, this is the money you receive after selling an asset. If you sell an asset, how much cash do you receive? So in that case, we are told in note 2, that investment had a cost of 13.5. It was sold for 15.3. How much cash was received in that case? Is it 13.5? Is it 15.3? How much cash was received? You can tell us here. The cash inflow, the sales proceeds, that's basically what we consider here. Yes, I'm told by Evans that the cash received here is 15.3. 15.3. Eunice, yes, that is very much correct. 15.3. And then 15.3, this is an inflow. When you sell an asset, you receive money. You sell an asset, you receive what? You receive money. You receive money. Yes. So basically, that is it. That's what we need to recognize here. So we are done with that. Let's move to note number 3. We are told during the year, a new machinery worth 18 million was acquired Was what? Acquired. That is also another free entry here. So the company acquired a machine. So once the company acquired a machine, that is still an investing activity. So we say there was acquisition of what? Of a machine. There was acquisition of a machine. You can see the number of entries we have in our statement of cash flows, yet we have not done any working. Have we done any working, Kelvin, here? Have we done any working, Eunice? Have we done any working, Evans? We have not done it. And you can see the number of entries which we have. So because I've said what is marked in these particular questions are these entries. This is basically what we refer to as the low-hanging fruits. This is basically marks you get without a lot of struggle. So and then you are told in the same point number 3, sentence 2, some item of property, plant and equipment at a cost of 1.5 and accumulated depreciation of 300,000 were disposed for 750. So many free marks here. So we have disposal. Disposal, remember, is the same with the sale. Is the same with the sale of an item of PPE. What do we consider here? What we consider here is the proceeds. So that item of PPE which was disposed, we are told it was disposed for how much? Can you see the sales proceeds here? So that item which was disposed, was it disposed at 1.5, 300 or 750,000? It was disposed for how much? What is the sales proceeds? That is basically what we consider here. Yes, the amount which we consider here is 750. 750. The sales what? The sales proceeds. So basically we are done with that point. Let's move to point number 3. Point number 4. We are told included in the operating expenses for the year which ended 31st of March 2024 is depreciation charged, and the depreciation charge for the year which amounted to 5,550,000. So in our case, we come back here, we are given this depreciation, which is 5,550,000. That is another free entry. So, and we said that this is a non-cash item. It was deducted in this profit, we add it back. That's when we say this part, these 4 items there, we add them to the profit. So we are done with that. So we move to point number 5. We are told the company issued bonds worth 15 million at a face value in exchange of a plant asset on 31st of March 2024 and repaid bonds worth 7.5 at the face value, at the face what value. Now in that case, we are given 2 transactions in one point. One, we are told the company issued bonds. Bonds are basically the same with the debentures. So bonds are the same with the debentures. So mean that if you go to the balance sheet, to the statement of financial position and the non-current liabilities, you should be able to see bonds there. And I hope you can see that in our statement of financial position and the non-current liabilities, we have both. Bonds are basically the same with debentures. We are told that there were some bonds which had a value of 15 million, which were issued in exchange of a plant. Let me first of all ask, is this, or do we have any movement of cash there? The moment the company issued bonds in exchange of an asset, do we have any inflow or outflow to the company? Do we have money flowing in or money flowing out? You issue bonds, you receive an asset. You issue bonds, you receive an asset. Is there any movement of cash there? There is no movement of cash. So therefore, what is important to note is that when preparing a statement of cash flow, actually from our definition, I said, it is prepared to show the sources of cash and the application of that cash. How was the cash generated by the company utilized? So therefore, in preparing a statement of cash flow, any transaction which does not involve movement of cash, any transaction which does not give rise to cash outflow or cash inflow, we don't consider it here. Sasa, yes, like that transaction will not be considered here. It's a non-cash item. But also on the same point, you are told the company repaid bonds. So when talk about repaying bonds, you see bonds are issued by the company for the company to borrow money. So the company usually will have agreed with those who will buy bonds that they will be given back their money after a number of years. For example, the company can issue bonds having a life of 5 years. So meaning that the holders of the bond will be given back their money. In other terms, the company will pay back those particular bonds at the end of the 5th year. So once the company repay bonds, that is a cash outflow. And where do we consider that? We consider that here. That's why we said all the items which you record here, we get them from equity, non-current liabilities. We know both are part of the non-current liabilities. So here we will come and we say there was a repayment of bonds. There was a repayment of bonds, basically which had a value of 7.5. And this is cash outflow. The moment the company repay back the bonds which had been issued that involve cash what? Outflow. So we are done with that point. So let's move to point number 6. And you're told the company issued 2.25 million ordinary shares of shillings 10 per, basically per value. So where do we consider this? This one is considered here. And basically, can you go to where we have, because that basically affected the share capital. Let's go to where we have share capital, share capital, share capital. And basically, in that case, you can see the share capital increased because remember, in our case, we are given a statement of financial position for 2023. I've said these are opening balances, and 2024, basically, which you have said are closing balances. So you can see the ordinary share capital at the start was 47 to 50, and then at the end of the year, the share capital increased. So the reason why we have an increase in share capital is because the company issued shares. So who can tell us how much is the increase here? The increase is how much? The increase, that increase in share capital, yes, I'm told by Evans is 22,500. So basically, as per point number 6, we are told this increase was due to issue of how many shares? The company issued 2250 ordinary shares, each share having a value of 10. So if we multiply this, the value of each share with this one, you'll see that will automatically give us that amount. So when the company issues shares, that one is considered here is a financing activity. The company issue a share to do what? To raise finances. So we say there was issue of ordinary shares. So how much amount was received? 22.5. So the amount received by the company is a cash what? Inflow. So we consider that here. We consider that here. Yes, we consider that here. So then after that, we move to the last point. Number 7, the company paid cash dividends of 1.2. This was a very, very simple question. Almost everything is provided. So once the company paid dividends, those dividends paid are recorded here. So we say cash dividends paid. Cash dividends which were paid how much? 1.2. So the moment the company paid dividends, that is a cash outflow. That is a cash outflow recorded here as a negative. Recorded there as what? As a negative. Are we done with the notes? Yes. Can you see the number of entries we have here? Even if, for example, the question was marked like this, because this one automatically, you can see it has so many entries. So automatically, for every 16 ticks, 16 correct entries, you get a mark for each. And basically, by the end of the day, you get how many marks? 16. Can you see the number of entries we have? Basically, we have not done any working, but you can see the number of entries we have. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. If you decide to read that question like that, you'll be having all the marks. You'll be having all the marks. And basically, that's a question which you should be able to do within not even more than 30 minutes. Because the other thing, maybe for those who are doing the 𝗙𝗃 exam for the first time, so you'll come across a question with 5 marks. 5 questions, sorry, 5 questions. You're given 3 hours. So if you take 3 hours times 60, that basically comes to a total of 180 minutes. 180 minutes. So this basically to handle how many questions? 5. So if you take 180, you divide with 5, basically this will give you 36. So it basically means that this question should not take more than 36 minutes. More than 36 minutes. That's why it's basically important for you to know the approach to use, because if by the end of the day you start with doing the workings and then later on you prepare this, you'll spend a lot of time. So you may see that you're spending one full hour to do one question. And basically, remember, you have 4 other questions. So that's why it's very, very important for you to be able to know the approach to use in doing these questions in an exam. Other than knowing the approach, number 2, you should also be able to know how to harvest the low-hanging fruits, how to get the free marks. The free what? The free marks. Now, after doing that, there are other free marks here you should always get. You should get down here. And basically, that is in relation to the changes in working capital. These are also free marks. Changes in working capital. Now, here, remember we consider majorly 3 items. 3 items. And for you to be able to remember the items we consider here, Just recall that acronym. Just recall that word. Just recall this acronym here. RIP, receivables, inventory, and what? And payables. That is basically what we do, what we consider here. So Juma is asking, so workings don't carry any single mark. No, Juma, workings do not carry any single mark. In fact, having marked these papers for a number of sittings, I know those who mark, the moment you start with the workings, you just put cross line like that. So if you, for example, you have the first page and the second one is working, just a cross line like that. So the person who is marking this question for you will be checking, did you prepare the statement of cash flow? And now, if you prepared this, he will come and check these correct entries. So that's where the marks are. Never start with workings. Those workings, by the end of the day, they do not earn you any marks. They just consume a lot of your time. And I've said any working you are doing here, do it per need basis. You are computing an item to be posted here. Don't compute something which is not required to be posted here. Do all the workings per need what basis. Because knowing that approach, Juma, is very, very important. It will save you a lot. It will save you a lot. Yes. Let's come back here now. Let's come back here. I want us to still do another question like this. So here we consider three items: receivable, inventory, and payables. So receivables, inventory, and payables. But basically I've said, remember this acronym. Not less in piece, but this one stands for the receivables, inventory, and what? And payables. Now, what we need to do basically here is to do what? Is to determine whether there was an increase or decrease as far as these three items are concerned. Now, to make it very simple, here there is a formula I give my students. So here we take this. I'll be able to explain what you mean by that. O minus C. And then here C minus O. Yes. So just remember that. O minus C, O minus C, C minus O. So what is this? This is opening balance minus closing. Opening balance minus closing. Closing balance minus opening. So you apply that formula. Whatever you get by applying that formula, if it is a negative, you record it as a negative. Whatever you get by applying that formula, if it is a positive, record it as what? As a positive. Yes. So we start with we go to where we have our statement of financial position under the current asset. We know inventory and receivables is part of the current asset. So can we start with the first item? And that is the inventory. So we will take the opening, which is 16.5 minus the closing. Opening minus closing. 16.5, which is the opening, minus closing, which is 21.6. 21.6. What do we get? What are we getting here, Eunice? Yes, we are getting negative 51. So record it as a negative. That is an outflow. That is what? An outflow. And basically that is inventory. That is what? Inventory. That is the inventory. That is the inventory. And then from there, we do the same. We do the same for receivables. Receivables, we do the same. Opening minus closing, 82.50 minus 70.50. So we get positive what? Positive 21. Positive 21. So we have that. But now, before we move to receivables, to payables, I hope you can also be able to see under the current asset. Below cash, can you see we have prepayments? Can you see we have prepayments? Yes. Now, prepayment is basically part of receivables. It's part of what? Receivables. So in case under the current asset, in most of the cases, you'll be given the account receivables, and other receivables. If you're not given other receivables, the examiner will give you prepayments. Other receivables can also be known as what? Prepayment. So what we consider here is the trade or the account receivables and other receivables. So in case you're given prepayment, also you have to consider that here. Are we together? Yes, because this is one of the items most of the students will not consider here. So prepayment, basically I've said is the same with other receivables. We are going to use the same formula. Opening minus closing, because the same with the receivables. So can you do that? Opening minus closing. Opening minus closing, what are you getting? That is giving us negative. Negative 600, eh? Negative 600. Yes, I'm waiting for the answer. I'm not getting the answer here. Please give me the answer. I'm saying under the current asset we have, below cash we have prepayments. Below cash we have prepayments. We have prepayments. We have prepayments. It is positive, eh? Yeah, it is positive. It is positive. It is positive. It is positive. Okay. So then we got where we have current liabilities. We consider payables. Current liabilities, payables. For payables, we use this formula: closing minus opening. Closing minus opening. Closing, which is 75, minus opening, 6450. 6450. So which is giving us what? Which is giving us 1050. Are you getting 1050? I'm not getting the answers here. I'm not getting answers. Juma, give me the answers. Eunice, Paul, give me the answers here. Give me the answers. Give me the answers. Hussein, Felix, I'm waiting for the answers. Zipporah, give Morimu the answers here. Give me the Morimu the answers. Okay. Yes, that's basically what we have. It is also important here also under the current liabilities. Under the current liabilities, just like what I've said under the current assets, under the current liabilities, you also need to check whether you are given something like accrued expenses or maybe accruals. So what else do we have there? We have, yes, there is something also we are going to consider here, and that is accrued liabilities. Now, the accrued liabilities, that one is the same with the accruals. So, yes, other than considering the payables, you also consider other payables. Other payables can be accruals or maybe accrued expenses. So we also consider that here, and that is the accrued liabilities. Accrued liabilities. Accrued liabilities, we use the same formula here, this one, closing minus opening. Closing minus opening, closing 18 minus 1350, which will give us what? 450. 450, is that what you're getting? 450? Yes, 450, which is basically a positive. That's what we consider there. Then I think we're almost done. Two other items which are also important here. Number one is the tax paid. The tax paid, and number two, the interest or the finance cost which was paid. Now, for the tax which was paid, this one we need to do some working. So which is not complex, because what we consider are two items. One, if we go to the income statement, we have the income tax expense for the current year, which is 1050. And then if we go to where we have current liabilities, we have tax payable. So how do we compute the tax which was paid? To compute the tax which was paid during the current year, I want you to be very keen. We take the accrued tax at the start. At the current liabilities in the balance sheet, how much tax was payable at the start of the year? The tax payable at the start of the year was how much? Was 750. So this is the tax the company was supposed to pay during at the start. And then to that, we add the tax which was payable during the current year from the income statement. From the income statement, our company was supposed to pay a tax of 1050. So this is the total tax the company was supposed to pay during this year. And then less the tax which are not being paid at the end. The tax which are not being paid at the end is what we have in the balance sheet under the current liabilities, and the tax which are not being paid was 450. It basically means that the difference here is the tax which was paid. So this will give us tax paid of how much? I've taken the tax the company was supposed to pay at the start, the tax the company was supposed to pay during the current year, and then I've deducted what are not being paid at the start. And basically that will give us what? 1350. And then for the interest which was paid, this one I think is quite straightforward. You consider two items: the interest expense in the income statement, which was this one, and still you go to where we have current liabilities. You check, do we have any accrued interest? In case we have accrued interest under the current liabilities, you use the same approach we have used for tax there. You should take the accrued interest at the start plus the interest in the income statement, this one, minus the accrued interest at the end, which basically give us what? 3450. That is basically the tax which was paid. Not the tax, rather, the interest which was paid. And in our case, we are done. That question, don't even bother trying to add anything. Don't bother adding anything. The person who is marking your paper will be interested with these entries which we have here. He will be interested with these entries, so he will mark these entries. These what? These entries which are here. These entries which are here. These are the entries which will earn you the marks like that. Not even the workings. Not even the working. So that is basically what will be marked. And therefore, as you practice, can you try to use this particular approach here? This basically will save you. This will do what? Will save you in an exam. This will save you in what? In an exam. I want us to do another question. I want us to do another question for cash flow. I want us to do another question for cash flow. Another question for cash flow. Another question for cash flow. For cash flow, we can pick another one, just a random one. I want us to go to the question for August 2023. August 2023. August 2023. August 2023. August 2023. August 2023. Still from CPA foundation level. Still from CPA foundation level. CPA foundation level. CPA foundation level. Yes, and maybe for those who are joining the class, our class here for the first time, who are not part of our students. So our block revision actually started today. This should be our first class for revision for financial accounting, and yes, financial accounting. So if you know of a colleague who is basically preparing for August 2025 exam, is not well prepared, you can basically talk to him or her to join us, to join our revision. Right now we have an early bird discount. Basically, if a person pay for our blocks, we are just charging as low as 1,500 per word per unit. So basically, this will help you in terms of accessing our revision for the next 4 weeks. So our revision classes will take place from today, which basically is 21st of August up to 16th. This is the 21st of July up to 16th of August. So basically, this will be a 4-week marathon for revision classes. So if you know someone who is preparing for this exam, the August exam, is not well prepared, or maybe he wants to prepare, so you can talk to him or her basically to join our revision classes. I've said we are charging 1,500 for all the units, but maybe for those who are doing BDA, Business Data Analytics, this is an exit paper in CPA. For that paper, we are charging 2,000. That is an early bird discount. It will expire tomorrow. So if you take the advantage of the discount, basically that will be better. So from tomorrow, the amount now will go up with 500. So that question has already been shared here by Evans. August 2023, which is question number 4. August 2023. Question what? Question number 4. So what are we told here? The question reads, we are told the following information was extracted from the financial statements of 𝗙𝗪𝗇 Limited for the year which ended 30th of June 2023, 30th of June 2023, 30th of June 2023. So we are given the statement of financial positions here. That is the statement of profit or loss for the year which ended 30th of June 2023. And then we have the statement of financial position for 2023 and basically 2024. So in that case, we have said 2022, the figures given there are opening balances. 2023 and the closing what? The closing balances. The closing what? The closing balances. The closing balances. So we have basically that statement of financial position. We have the additional information, number 1, all the way to note number 5. So what are we required to do here? we are required to prepare the statement of cash flows for the year which ended 30th of June 2023 in accordance with IAS 7. Is the method to be used specified? No. But I've said if you come across a question for cash flow and you're given the income statement of financial position, always use the indirect method. So and then from there, we're required to comment on how 𝗙𝗫𝘄 Limited has generated and used its cash and cash equivalent for the year. So you can only be able to comment on that after preparing the statement of what? Of cash flows. After preparing the statement of cash flow. So we have said never start with the workings, just go straight to what is required by the examiner. So the name of this company is 𝗙𝗫𝘄 Limited, and this is the statement of cash flows. The statement of cash flows, which is basically for the year which ended 30th of June 2023. 30th of June 2023. 2023. So here we start by determining the cash flow from operating activities. Cash flow from operating activities. We need to have two columns here. And I hope you can also be able to see our figures there are given in thousands of shillings like this. Are given in thousands of shillings. Are given in thousands of shillings. Yes, so we have said we leave enough space here. Then we have the other subheading for computing the cash flow from investing activities. And I hope you can be able to recall investing activities. These are the activities involving acquiring and disposing assets. And then we have the other subheading for determining the cash flow from the financing activities. Remember, I've said all the items which we record here, we get them from equity and current liability section. And then down here, we come and we record the cash and cash equivalents. Cash and cash equivalents at the start, and the cash and cash equivalents balance carried down. So that is the first thing you need to have there. That is the first thing you need to have. You need to have. So if you have that, I want us to now move together. We prepare this together. So do you have that format with you? If you have that format with you, I think we can move together. Do you have that format? Do you have that format with you? If yes, type that in the chat box. Yes. So we have said we always start by recording what? The cash and cash equivalent at the start and also at the end. So can we do that? We go to where we have the current assets. In the statement of financial position, we determine how much was the cash and cash equivalent at the start and also at the end. I've said we consider a number of items: cash in hand, cash at bank, short-term investment. We go to where we have current liabilities. We see whether we have a bank overdraft. So under the current assets, so I can see we have short-term investment. That is the first thing we need to consider here, short-term investment. The short-term investment at the start. Remember, 2023 is the current year. These are the closing balances. 2022, these are opening balances. That is very important. So the short-term investment at the start is 50/40. So below that, we have cash in hand, which is 25/80. And then we go to where we have current liabilities down there. We check, do we have a bank overdraft? Yes or no? Yes, I can see we have a bank overdraft. The bank overdraft at the start, which is 2022, is 39,240. And in this case, I've said a bank overdraft. We take it here as a negative. We take it here as what? As a negative, because this is money which is owed to the bank. we get the net amount. We get the net amount. That will give us a net amount of what? We have 50/40 plus 25/80 minus the overdraft, 39/40. 39/40. What are you getting here? What are you getting here? I'm getting negative 31,620. 620. Is that what you're getting? Is that what you're getting? Yes. And that one is a negative. We do the same at the end of the year. So at the end of the year, we will take the short-term investment, which is basically 10 to 60. And then we take the cash in hand, which is basically 12. And then we less the overdraft, which is 14,340. 14,340, we get the net, and that is the cash and cash equivalent at the end. So 10 to 60 plus 12 minus 14,340. And that will give us negative what? Negative 28,810. Negative 28 what? 8. We already have two entries which are correct. Then we come back here and we start by recording a cash, that is not cash, rather, the profit before what? The profit before tax. What is the profit before tax from the income statement? The profit before tax from the income statement, I hope you can see that, is a figure of 14,400. I hope you can see that. Then we make a number of adjustments to this profit. And the first adjustment we make to our profit, we said, is to add back the finance cost, or basically to add backward the interest. The interest. That is the first thing you need to remember, which is basically just above this. So, and I hope you can see that figure there, which is 25. So we add it back, such that now we have what? We have the profit before interest and what? And tax. Then we have said to this, we need to, or we adjust that profit with the non-cash items. We just need to remember this acronym, the DIAL-G. This stands for depreciation on property, plant, and equipment, PPE. This one stands for impairment loss. Impairment loss on goodwill. And basically this one stands for amortization. Amortization of intangible asset. Amortization of intangible asset is the decrease in value of intangible assets. And then this is loss on disposal. Loss on disposal. And then this one is the gain on what? On disposal. So we have said these past four items. This one, we add them to the profit, but this one we do what? We less. So on the face of the income statement, do we have any of those items on the face? Like the other question. On the face of the income statement, we don't have any of these items, but I can see investment income. Can you see the investment income? Yes. Investment income, basically, this is an income generated by the company from investment. So it is already included here. What we will do, we will less it from that profit. Why are we lessing it here? Is because it's not an income generated from operation. Generated from operation. So we less it here, then bring it here. And basically, therefore, what you need to note from the other question which you have done, interest income received is the same with the investment income. Investment income is the same with what? Interest received. That's that? Yes. So you bring that here. It's an amount of how much? 15. So then from there, we don't have anything on the face of the income statement. Can we go to the additional information? Let's go to the additional information. In the additional information about what we are told, the revaluation reserve relates to freehold land. So if you're given told revaluation reserve, these are components of equity. If you go to the balance sheet and the equity, you should be able to see that. But it's also important for you to note that if there was some asset, for example, which were revalued upward or downward, we don't consider that here because that is a non-cash item. So we are not even concerned with that. Let's go to note number 2. We are told depreciation on plant and machinery amounted to 6.9. Amounting to 6.9 was charged to the statement of profit or loss. In that case, we are given depreciation of 69. And remember, when taking any figure from the additional information, remember to omit the last 3 zeros because you can see our figures are in thousands. So we add it to this profit. Number 3, part of the long-term investment was sold during the year at a profit of 960. So in this case, we are told part of the investment was sold at a profit. We are only given the profit in this case. We are not given the sales proceeds. So what do we record here? One, we will record that sale of investment. But remember, I've said what we record here are the proceeds. So how much amount was received from the sale of this investment? Are we given that? No. But what we are given is this. We are told there was a profit. A profit is the same with a gain. A profit on sale is the same with a gain. So the profit on the sale is the same with a gain. So there was a gain in this case of how much? Over 960. So that gain, this one we less it from that profit. But even before we move to the other point, number 4, can we be able to know this investment which was sold? It was sold for an amount of how much? Can we go back to where we have non-current assets? Non-current assets. Non-current asset. How many assets do we have there? We have 3. Freehold land, plant and machinery, investment. Automatically, because investment was sold, the value for investment reduced. Can you see that? The investment at the start had a value of 22.5, and then that reduced to 21.6. Can you give me the reduction? Give me that reduction in the value for the investment. And then I will be able to explain how do we compute the sales profit. How do we compute the sales profit? So the value for investment reduced with what? The value for the investment reduced with what? The value for investment reduced with what? The value for investment reduced with 900. It basically means that this investment which was sold had a value of 900. They had a value of 900. The company sold the investment having a value of 900. This is the value for the investment. But by the end of the day, we are told the company made a profit of 960. So that is a profit, made the profit of 960, made the profit of 960. So in this case, can you be able to know our investment was sold at how much? If you have an asset having a value of 2 million, and then you sell it to make a profit of 1 million, you sold that asset at an amount of how much? You have an asset having a value of 2 million, but you sold it, you made a profit of 1 million. So you sold that asset at an amount of how much? That asset was sold at how much? Very simple. If you have an asset having a value of 2 million, you sell it to make a profit of 1 million. Automatically, you sell it at 3 million. The same concept you're using here. So this investment was sold at its value, 900, plus the profit. So this one was sold at 18.60. So that is a cash inflow because this money received from the sale of the investment. So let's go to note number 4. We are told during the year, the plant with a net book value of 4.5 was sold for 8,820,000, and then you're told it had an original cost of 18. So what we are interested with here is the amount which was received from the sale. Remember, anytime the company sell an asset, you consider here. We say there was a disposal. Disposal is the same with the sale of a plant. What do we consider here? We consider the proceeds. It was sold at how much? It was sold for 8,820,000. So that is the what? That is the proceeds. That is the sales proceeds. Also, if you can be able to recall, we say that anytime the company sell an asset, you have to determine was the asset sold at a gain or at a loss. So we said if you can be able to remember, my student for FA, we said you need to prepare a disposal account, though it's not a must. Once the company sell an asset, for you to determine whether it was sold at a profit or at a loss, just take the sales proceeds. Just take the sales proceeds. The asset was sold at an amount of how much? You less the net book value, which is also known as the carrying amount. In that case, we know that item was sold at 8,820. I hope you can be able to see up there, minus its net book value. We are not given the net book value, but basically, yes, we are given the net book value actually. The net book value is given, which is 4.5. 4.5. So you can see automatically that asset was sold at a profit. Because we said by applying this formula, if you get a positive figure is a profit or a gain. If you get a negative figure is a loss. Is the loss. So how much is the profit here? The profit in other terms known as the gain. The profit or the gain is how much? 8,820 minus 45. Yes, we have a profit of 43.20. So this is a profit, or in other terms, is a gain on the sale. Is a profit or is a gain on the sale of a plant. Now, That should also be captured here, because you can see the company sold 2 assets. There was what? There was gain on both. So that gain, so remember there's a gain on sale of investment, and then we have gain on sale of plant. So the gain on sale of plant is 43.20. We also less it from our profit, because in arriving at this profit, it was added, but it's a non-cash item. It's a non-cash item. So we are done with that point. Let's move to point number 5. We are told the following balances were extracted from the statement of changes in equity for the year which ended 30th of June 2023. So this is basically the change in the retained earnings. So we are given the retained earnings at the start, the profit after tax, the interim dividends which were paid, the final dividends which were proposed, and the balance. Now, from that information, what we are going to consider here is basically the interim dividends which were paid. If the company pays some dividends, and basically talk about the interim dividend, these are the dividends payable paid by the company in the middle of the financial year. If the year starts January, end in June, maybe the company in course of that year paid some dividends. That's basically what we consider here. So the dividends which were paid, that is basically 900. The dividends which were paid, the interim, but you can see we have other dividends which were proposed to be paid. So the proposed dividends were not yet paid. They were 27. But I think you have now to compute the final dividends which were paid. The final dividends which were paid. So how are we going to compute these final dividends which were paid? We are going to use the same concept which I've explained in the other question for computing the tax paid or for computing the interest paid. Now, if you go to where we have current liabilities, can you go to where we have current liabilities? Current liabilities. At the current liabilities, you'll be able to see proposed dividends at the start, at the end, in the balance sheet, and at the current liabilities. So we are going to use the same concept we have used in the other question. In the other question. So yes, thank you for that. I'm told it is not that 𝗙𝗵𝗵 is speaking here. No, I hope maybe you're asking about this one. I hope you're asking about this one. Are you asking about this figure? Yeah, the gain? Yes, the gain should be a negative. And this one should be deducted from our profit. I hope you did the same for this. Any gain on the sale of assets has to be deducted from this, because this one is already added here, but basically is a non-cash item. We do what? We less it. Yes. Now let's come back here and we compute the final dividends which were paid. I'm saying we are going to use the same concept we have used in computing tax paid, interest paid. So what we do at the current liabilities, we will take the dividends which were proposed at the start, that is the year 2022, and they were 22.80. These are the proposed dividends the company was supposed to pay at the start, and then we add the proposed dividend for the current year, which we have in note number 5. The proposed dividend for the current year, they have a value of 27. So this will give us the total dividend the company was supposed to pay during the current year. And then we less the dividends which were not yet paid at the end. The dividends not yet paid at the end, you can see they have a value of 27. So can we be able to determine the dividends which were paid? Yes. So it will basically be this one. 22 what? 22.80. We record it here as a negative. So, and I think we are done with the notes. Having finished with the notes, then we come down here and we consider what? The changes in working capital. Never forget to get these 3 marks. Changes in working what? Capital. Because here we have said these are just 3 marks. These are just 3 what? 3 marks. So here we just need to recall the acronym, that is RIP, not less in piece, but receivables, inventory, and payables. The receivables, inventory, and what? And payables. So how do we deal with these 3 items? We just need to determine whether there was an increase or decrease, and then we determine is that increase or decrease an inflow or outflow. So I've said just use this formula: opening minus closing, opening minus closing, and then this one closing minus opening. As simple as that. As simple as that. As simple as that. Juma, I've said the computation of this, we are using the same concept. If you have understood how we have computed the tax paid in the previous question, we are using the same concept. You see, the proposed dividend and the proposed dividend and the current liabilities, those are the dividends which were not paid at the start and also at the end. The proposed dividends we have in note number 5 are the dividends the company was supposed to pay during the current year. So how do you compute the actual dividends which were paid during the current year? You take the dividends the company was supposed to pay at the start, add what the company was supposed to pay during the current year, and then compare that with the dividends not yet paid at the end. Automatically, the difference represents the dividends which were paid during the current year. And that is basically the same concept used in the computation of tax, in the computation of interest. That's that? Yes, the same concept. If you understand that, that will save you for 3 items: the tax paid, interest paid, and the proposed dividend. That's that? Yes. So let's deal with these 3 items. We are going to go to where we have the statement of financial position, and we start by picking receivables. So not receivable, rather, let's start with the inventory. We take opening minus closing. The opening is the figure we have in the statement of financial position for 2022. That is 200 minus closing 40, 300. And I'm getting negative 81. Negative 81. I hope that is what you're getting. That is for inventory, not receivables. Inventory. Inventory here. Yes. So I'll do the same. We need to do the same for receivables. For receivables, we take the opening, which is 46,800, minus closing, which is 36,840. What are you getting? I'm given by Evans 9960, basically, which is a positive, is a cash inflow. Then we have said you also need to check whether you have other receivables or prepayment. Do we have other receivables or prepayment? No. We go down there where we have the current liabilities. Under the current liabilities, we only consider one item: account payable. Account payable, we use this formula: closing minus opening. Closing minus opening. So the closing is 35,100 minus opening, which is 31,500. And basically that will give us what? That will give us 36, which is a positive. Which is what? A positive, which is a positive. And then from there, we proceed and determine 2 other items. We proceed and determine 2 other items. One, we less the tax paid, and then we also less the interest or the finance costs paid. So we can start with the tax. Tax, we are using the same concept we have used in the other question. So we go to the income statement, how much is the tax for the current year, and the statement of financial position at the current liabilities. So can you first of all go to where we have current liabilities in our statement of financial position, and we consider whether we have tax. Yes, and we have tax. The tax which was not yet paid at the start is 36. And then to this, we add the tax in the income statement. I hope you can see the tax in the income statement, 54. And then we minus, just the way we have computed the dividends which were paid, using the same concept, minus the tax not yet paid at the end, which is 49.20. So the tax in the income statement is 54. Tax at the start is this one. Yes, so that will give us tax paid of how much? Yes, 48. So we do the same for interest. For interest, you just need to go to where we have current liabilities. You check, do we have any accrued interest under the current liabilities? No. If that is the case, it basically means that the interest paid is what we have in the income statement here. But if we had any accrued interest under the current liabilities, we use the same concept. Take accrued interest at the start plus the interest or the finance cost from the income statement minus the accrued interest at the end, which will give us what? That amount. We are done there. So don't even bother yourself adding anything. Let's come here. I think here majorly we have dealt with most of the items because we are given the asset which were acquired, the asset which were purchased. Can we go to the equity and non-current liabilities? in our statement of financial position. At the equity, first of all, I can see share capital. The share capital at the start was 90,000. It increased all the way to 108. What causes the share capital to increase? The share capital increases because our company issued shares. So we will come here and we say that there were shares which were issued. The shares which were issued will automatically be equal to the increase. 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 How much is the increase here? The increase is 18,000. So the shares which were issued by our company, they had a value of 18,000. 18,000, which is a cash inflow. Below that, what do we have? We have share premium. Share premium, did it increase? Yes. What causes the share premium to increase? The share premium basically increases because these shares which were issued, they were issued at a premium. That increase in the share premium represents the money which was received by the company in form of share premium. So you will also come here and you say there was increase in what? In share premium. And basically in this case, the share premium increased with how much? The share premium increased with 45. That also represents money which was received by the company, but in form of what? In form of premium. In form of premium. In form of premium. We are done with that. So below that we have revaluation reserve. Do we consider that here? No. Revaluation reserve, this changes as a result of revaluation of assets. Once the company revalue assets, either upward or downwards, that is a non-cash item. We don't consider that here. Below that, the retained earnings, mostly that is used in the computation of dividends which were paid, but I think we already have that. Then we go to where we have 10% loan. 10% loan at the start, 32. At the end, that loan reduced. What causes a reduction in the value for the loan? What will make the loan to reduce from 34 million to 25 million? What causes the loan to reduce? What causes the loan to reduce? Who can tell us here? What causes the loan to reduce? The loan will reduce because of repayment. The loan reduces because of repayment. So we come here and we say there was a repayment. There was a repayment of 10% loan. There was a repayment of 10% what? Loan. So how much was the repayment? Which is basically equal to the decrease. Which is equal to the decrease. Which is equal to the decrease. Is it 9? Is it 9,000? Is it 9,000? Yes. And automatically, the moment the company repays a loan, that involves what? Cash outflow. So if you have taken a loan from the bank, you repay back that loan. That involves cash what? Outflow. That involves cash outflow. That question you debate at that point. Don't even bother yourself adding the totals here. Don't. That is pure wastage of time. The person who is marking your paper will come and check these entries. Will come and check these what? These entries. These entries. These are the entries basically which will earn you marks. These are the entries which will earn you what? Will earn you marks. And I hope you can see in our case, have we done any working here? Have we done any working? No. You can see all the workings which you are doing. We are doing them inside the bracket here. That will save you a lot of time. Will save you a lot of time. By using this particular approach, number one, I've said you'll be able to finish the question within the time you have, because I've said for you to handle this question, never make a mistake of taking more than 40 minutes. Maybe these questions computation, you can give yourself 40 minutes, because mostly will come across a theory question. Maybe the time you're taking to do a theory question, maybe you can just reduce it, maybe like to 20 minutes, such that this computation don't take more than 40 minutes. If you take more than 40 minutes, then that is a disaster. That is what? A disaster, because you'll not be having time to handle the other questions. So just pick those low-hanging fruits, those 3 marks, which basically you can be able to get without a lot of struggle, without so many workings. And actually, you can see this question, even if, for example, this is how the question was marked, any 14 ticks at 1, you will see we already have all the 14 marks. All the 14 what? Marks. Because even if you count the number of ticks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So we already have all the marks with us. Yes. So that approach, which I've showed you, very, very important. So as you practice, so can you use that approach? Make use of that particular approach. Basically, this will help you in terms of passing any question for cash flow. The other thing you also need to understand is where do you get free marks, or basically what in other terms we refer to as low-hanging fruits. I've said there are those marks which are free. Like here, changes in working capital. Make sure you get those marks. Provided you can be able to remember it, and these formulas I've given there: opening minus closing, payable closing minus opening. Then here you can be able to remember this acronym, 𝗙𝗪𝗃. Then here you also need to remember that the items we consider here come from equity and current liability. So if you're able to do that, these are questions. Once you come across this question, be assured you'll be able to pass. And basically, like for those who are doing CPA foundation level, so I'm expecting that this is one of the questions you're likely to come across. This is one of the questions I'm expecting it will be examined. It will be what? Examined. If you check last teaching, there was no question on this. So can you do a lot of practice? Can you do a lot of practice? A lot of what? A practice as far as that is concerned. And then there was that other part, part B, comment on how 𝗙𝗪𝗃𝗵 Limited has generated and used its cash from cash and cash equivalent for the year. Now, basically, for you to be able to do to make that comment, you have to get these net cash flows. For example, you get the net cash flows from operating, the net cash flow from investing, and then the net cash flow from what? Financing. You must get those particular net amount. So once you get those net amount, then you need to make a general comment. If, for example, here you get a positive figure, here you get a negative figure, and here you get maybe also a positive figure, the first thing you say is that this company generated cash, one, from operating activities because we have a positive there, and also from investing, from financing activities because we have a positive amount there. And then you say, much of the cash generated by the company was spent or was utilized by the investing activities because here we have what? We have a negative. We have what? A negative. Other than making that comment that the company generated cash through through operating and financing activities, and the company spent cash through investing activities, you can then be more specific and you say that much of the money which was spent by the company, or maybe much of the money which was generated by the company from investing from financing activities, it was generated from the issue of shares, because you can see here the company was able to raise a lot of money from the issue of shares. And here you can also be able to say that the company generated a lot of cash from investing activities by selling assets. By selling what? By selling assets. That is the comment. That is basically what you are expected to comment on. First of all, you must get the net cash flows from the three activities, and then make a general comment on which activities generated cash, which activities utilize the cash, and then you can also be more specific. You can be more what? More specific. More what? Specific. But what I want you to understand is basically how to handle this question for cash flows, particularly in what? In an exam. In an exam, because majority of the students basically understand how to prepare statement for cash flow, but basically they lack that particular knowledge of doing these particular questions in an exam. Because remember, you don't have all the time with you. You have just 40 minutes, less than 40 minutes to do what? To handle this question. You must be having a strategy on how to do the question within 40 minutes, and also how to get those free marks. That is very, very important. Very, very what? Important. Yes, so I'm told in this case, in case someone leaves a big space in between the three headings, we let be, no, basically no, that will not have any problem. But basically by then, by the end of the day, once you do a lot of practice, you should be able to know the space to leave here. So once you do a number of questions, you'll be able to see the space you need to leave here. Because I don't think you should leave more than half a page. More than half a page. More than half a page. Yes, more than half a page. Or maybe a three-quarter, more than three-quarter of the page. Because this basically where we have so many items, as you can see in the two questions we have done. Yes. So what I want you to do, I want you to pick other questions, maybe from the past papers. Those who are doing FR, we have so many questions on this from your papers. Those who are doing FA, foundation level, so many questions on this. Also, those maybe who are doing AFR, this is also a knowledge you need to have. Even if now the question for AFR, they have additional concept. The aspect of acquisition of subsidiary, disposal of what? Of subsidiary and so on. But this knowledge is basically important to all. The shortcut, how to get those low hanging what? Low hanging, or those basically those particular free marks. Yes, so basically for today, I want us to stop at that particular point. That particular point. We continue from there in our next class. We will basically be inviting you for free sessions, because I know some of the topics, like in FR, in FA, some topics may be the same, like ratios. Ratios are in FA, ratios are in FR, ratios are in the BDA, those who are doing BDA. So basically, once maybe Mwalimu is revising a common area, I will basically be inviting you to attend these sessions. So equally remember, I'll say that we started, actually our blocks our revision started today. If you know someone who is preparing for the August 2025 exams, and he needs some revision, you can talk to him or her basically to join us. I've said currently we have an early bird discount which will be expiring tomorrow. We are charging 1,500 for all units for CPA, CFA, and also ATD. But those who are doing BDA, we have an early bird discount of 2,000. So that early bird discount will be expiring tomorrow. So maybe you can talk to your colleagues and basically join our ongoing revision classes. So let's stop at that point for today. See you tomorrow as we continue with our revision. And that is for those who are doing FR. We have a class tomorrow. What we FA to on a Friday. What we are BDA, I think we have a class after this. Those who are doing AFR, see you tomorrow. So have a good night.